You're watching NCBA's Cattleman to Cattleman on RFD TV.
Welcome back. We're talking with the experts from Cattle Facts today, and let's begin on the corn market. Chad, I'll turn to you. Give us an update on the overall status of the supply of the U.S. corn market right now.
Well, Kevin, we've had very cool and wet weather this fall, and you couple that with the late maturity of the corn crop, and it's ended up with a very delayed harvest progress as a result of that. In fact, this year's pace has been the slowest harvest progress pace since the 1980s.
Wow.
As a result of that, corn supplies in the month of October were actually quite tight at that time when supplies are typically very large.
Right.
As a result of that, the market was very volatile moving into the end of October, and there's still a lot of corn to come out of the field. Bottom line is, though, good crop conditions throughout most of the year are pointing towards pretty good yields. In fact, probably record large this year. The good conditions are probably going to end up taking yields to 160 to 164 bushels to the acre.
That's amazing.
Which will be above the longer-term trend line and also exceeding the peak back in 2004. If you look at those yields, that's most likely going to end up putting production at about 12.8 to 13 billion bushels for the year. And that's going to press corn supplies to record large levels this year. As a result of that, it probably will bring some pressure onto prices later on, but for now we're looking at pretty plentiful supplies.
Yeah. So talk to us a little bit about the demand side of the equation. Has the corn market been as impacted by the economy as the beef cattle market has been?
It has. It has very much so. The high prices of last year, coupled with the slowing of the global economy, led to reduced exports for the U.S. It also led to declining margins for the ethanol industry, especially into the first quarter of 2009. And it also reduced feed usage. The very high feed costs led to reduced feed usage across all livestock industries. But the difference is here, looking forward, we're expected for that demand to pick back up as a result of prices that are well off last year's highs. When you look at total usage this year, that's expected to reach about 13 billion bushels, pretty close to the size of the crop. So as a result, we're not looking at a big change in ending stocks. But we are expecting to see the largest increase in usage to come from corn used for ethanol, which is expected to rise above 4 billion bushels for the first time ever.
Wow.
And corn exports are expected to rise back above the 2 billion bushel mark, while feed usage holds in there above 5 billion bushels. As a result of those, the increased usage, it's pretty even with the supply. Corn stocks to use are expected to remain about 12 to 13% for the year, which is a slight decline from last year. But it's also kind of walking the fence at that level.
Yeah.
Basically, as we look forward longer term, we're expecting to see increased domestic and global usage, especially with the renewable fuel standard, which is going to support continued increases in corn used for ethanol. That we're still going to be one crop failure away from sharply higher prices.
Yeah. Well, so let me put you on the spot on that note, and what are your expectations for corn prices?
Well, Kevin, I think corn prices are going to remain very volatile as a result of that. If you look at it in the long run, historically corn prices have traded in a range for about 30 to 35 years actually. And since 2007, corn prices have moved up above that $2 to $3 per bushel level where we are at for a long time. From 2007 forward, I would expect corn prices to spend a lot of time between $3 and $4.50 a bushel.
Is that right? Well, this is incredibly important information for any of us who have livestock or feed livestock, either one.